Hey everybody, it's John Ray with Jade Protocol, NFTreasure, and Smarter Coin, joined here again with Kyren Cater for Crypto Visionaries. And of course, our job on this channel is to unpack the nitty-gritty details of crypto so that we can actually understand and see everything that is important to our investment decisions. And what we're going to be talking about today is vitally important for any project that is going to have long-term success, and that is network effect. And there's kind of two variations of this that at some point come together as a hybrid. It's the actual network effect, which is the adoption of the technology and the use of the underpinning technical infrastructure that actually supports the decentralization of the network. And then there is the mimetic network effect that happens more at the brand level or the meme level. So we're going to unpack some of that and talk about how you can identify where something is at within its network effect to determine if it's on the right part of that curve to potentially be something interesting and or profitable. So Kyren, thanks for being here. I'm going to turn it over to you and let's get this thing started.
Sweet. Thanks, John. Hello, everyone. Welcome back. So very exciting topic yet again we have today. Network effects, as John has said, is vital in cryptocurrency, but nevertheless, it's really vital in any sort of industry because it pretty much is what draws and retains users. And it is absolutely, as we're going to see in a second, it's probably the most used at the moment sort of information age, I guess you could say, user retention sort of option. But we're going to get into some other examples and kind of give you the whole entire picture on where exactly network effects plays its most important role. So as always, we're going to start off with the definition of what network effects is. Hopefully this is a bit easier than the other examples we've given in the past. So I'm going to give you two. The first one is a network effect is a phenomenon whereby increased numbers of people or participants improve the value of a good or service. So the effect is produced by users and the value of the network depends on the use of products and services within that network. And network effects offer the best form of defensibility and value creation in the digital world and account for the majority of the value created in the technology industry and marketplaces, which is about 70%. Okay, so that can be a little bit confusing, and we're going to break some of those terms down in a second, but I'll rephrase that again. So network effects fundamentally means that every new user adds value to the product for other users that are also using the product or will use the product. And one really important thing, John, is what I found awesome is network effects should be able to affect positively the first user as it is the 1,000 to the 10,000 user. So if that 10,000 user come on, they should be able to improve the experience of the first user. So it's not as though it should be a compounding effect. It should be a more or less a synergetic effect.
Yeah, and there's many ways that we see this in crypto, but I guess the thing that everybody's always talking about is decentralization. How many nodes do there need to be for decentralization? And you know, the base level network effect is, well, how many people are actually, you know, holding the blockchain or the ledger for a particular network. And so then you can extrapolate that from there. And one of the things that I want to talk about in this video is what a network effect would look like in a protocol like Jade Protocol or NFTreasure. You know, network effects can also happen at the product design level. So you think about something like the Apple iTunes or App Store. That's a framework or a network that was created, but every time an app developer develops an app and puts it on the iTunes store, it makes every user that came before that has a more valuable experience now. And so it's one of the ways that product design can incorporate a network effect, and one of the things that we're definitely thinking about in NFTreasure. But let's get into the technical underpinnings that allow us to even build that product.
Yeah, sure. Just based off what you said, that's a great example of a multi-sided network effect. And we're going to get into one of those examples in a second. And as you said, the same thing with Jade and NFTreasure. So guys, it occurs in a lot of circumstances you wouldn't even begin to think of. It's pretty much everywhere in our current digital information age. So before we move on, John, I want to quickly solidify the fact with a few examples here, so people understand what we're talking about exactly. And as you can see on screen, this is kind of like the go-to example most people tend to gravitate towards when explaining network effects. And that is, excuse me, the telephone example. So I'm going to give you two more, not just this one. But essentially, if we can have a look at this chart. So when the telephone was first introduced, the first person who adopted the telephone obviously wouldn't have anyone to call. So that's not very efficient and there's no real value there. That second person gets a telephone and all of a sudden we see at the top here, that's created somewhat of a network effect, that there is a person that this initial person can call. But then if you add, say, 3 or 4 more people, you not only allow the first and the second person to call the third, the fourth, and the fifth person, but that is completely all interchangeable between every other person in the network. So therefore, the first person has just as much value as the fifth person, and they are more incentivized to continue using the network because it has more utility now. And we can see this continues and goes on and goes on. And the important thing is that there's a few different theories about network effects, and you can see the evolution in a few different examples throughout history. But initially it was thought, you have like one center of, I guess you could say, power or source in the middle here. And, every person would sort of get, be able to contact that source. But actually network effects are great because it allows, as I said to you before, it allows the first person to have the same amount of value as the 1,000th or the 10,000th person, which just means that it's ever expanding. And we're going to get into some charts in a second to kind of visualize what this looks like. And it's crazy. So another quick example I can give is the internet. Again, so the internet was initially used for a select amount of people. As more and more people began to use the network. And as John said, through that multi-sided platform example, which is a network effect, that, because there's a service, there's a middle ground where two sides can come and join on. For example, a developer creates an app on, say, iOS or Windows, and then the end user can come on and obviously use that. That's a multi-sided network effect. And that is a prime example of one of the use cases for the internet. For example, one of the rideshare apps, Uber is a great example of a multi-sided platform as well. So Uber, again, obviously you have the riders and the drivers, and that's all communicated through the app. So that's just some examples there. So it really does occur in pretty much every single, well, as I said, 70% of the current information age, platforms. So,
yeah. And I think one thing to keep in mind is there's so much talk about community in crypto. Oh, it's a community-led project. Really what that means is that there is an attempt at creating some kind of a memeable network effect. And sometimes that's a technical network effect, like they're actually supporting the network through nodes or validators. And sometimes that is just, there is a mechanism through proposals or whatever for the community to all have a voice, where somebody just entering today can have the same level of input and voice and ability to affect and direct the protocol as the first person who came in. And so that's the benefit of decentralization. The problem that often comes up is that it requires a deeper level of responsibility from everyone in the network. And so one of the reasons that decentralized networks sometimes don't work out, or community-led projects end up fizzling, is that there's not a deep enough level of personal responsibility for contributing to that network and actually continuing to provide value into that network. And so then it ends up becoming more centralized than it should be, because each node in the network or each community member is not delivering the value that lives within them. So whatever their highest and best skill set or use of their talent would be, we all have some way that we can contribute to the network, either as a developer, as a content creator, as a thought leader, or just in general discussion, raising red flags about certain things. So I just want to let people know that, a fax machine isn't valuable unless you send a fax. And so we need to make sure that as community members, if we truly want to be decentralized and experience this next wave of what a network effect can be, that we're contributing in meaningful ways to supporting the network.
We all have our own place in the sort of the ecosystem, and as John said, because it is like almost distributed, like we'd find with a network, like a distributed network, we all have an equal share and an equal part in it. And obviously, there's a part of that is within the network itself. Like, it's not entirely on us to sort of uphold our own utility and say like, okay, everyone sort of has to stay here and provide something, but it's very important that we do sort of uphold, a certain standard, I guess you could say. And John, before we get into some examples with cryptocurrency and Jade and NFTreasure, I want to just quickly talk about, because in that sort of example I gave to you before, that opening statement, I did mention a word called defensibility, and we talked about this in our previous tokenomics video briefly. And this is also going to lead us into the flywheel. Now, defensibility is a term that kind of works hand in hand with network effects and sort of any cryptocurrency project, because intrinsically, cryptocurrency doesn't have anything that isn't not copyable, because everything is open source. Every cryptocurrency project has their code available for anyone to copy. And this is what we find with when projects fork. Okay, so anyone can fork Bitcoin or any sort of chain, for example, and that just goes to show what is it that upholds certain networks. For example, if John and I created a fork of Bitcoin, what makes Bitcoin more valuable than our network? And that comes into defensibility. Or another word we can use for defensibility is a moat. So a moat, you could picture like a castle. Castles literally have physical moats to protect itself from the enemy. And that moat is the same sort of example. What protects that protocol or network from outside sort of, I guess you could say copycats. Yeah. And I want to go into just a couple examples again, and just kind of explain to you what defensibility actually means. So the first one is how we can retain users and protect ourselves by creating value in the network or ecosystem. And again, in other words, defensibility refers to the ability to maintain over a period of time a positive rate of return for a business, as in profits, or a network, of course, like in cryptocurrency, a positive rate of return that doesn't get competed away by other players in the ecosystem. Again, that could be like forking. And that's actually, I've quoted that from Ali Yahya, who is Anderson Horowitz, I think, employee or an advisor. So he's a very, very smart guy. And so I just wanted to say that before anyone thought I was copying him. But so defensibility is extremely important in cryptocurrency. And as I said to you before, it's kind of like it pretty much works along with network effects.
Right. And, in the traditional SaaS world where I come from, when you're building software products, a lot of times this is called churn rate. Like how long can you actually keep someone in your ecosystem before they get spit out and go to a competitor or go somewhere else? And when we look at what happened with Ohm forks in December and January, where they all came tumbling and crumbling down 50 to 99%, that was a defensibility problem, because it was so easy to fork an Ohm fork, the last fork was a 1 billion% API. We're going to be 4 billion% API, and then run some ads. And essentially you were able to massively grow your ecosystem, but you had a major churn issue because there was no defensibility, because once the house of cards fell, all the users left. And so that's churn. When everybody leaves the ecosystem because they're trying to be the first one out, that means that there was no defensibility plan for the continued growth of that network. And one of the reasons that both Jade and NFTreasure are now doubling down on real utility and an actual use case for turning an ROI is that is part of a defensibility strategy that keeps people in the ecosystem and prevents happening what happened in the Tomb fork craze, what happened in the Ohm fork craze. Like what happens is people go high, especially in DeFi, people go APR hunting, and they're only there while the getting's good, and then they get out, and there's no other reason to stay in that ecosystem, and that is a defensibility problem.
Big time. And this is what, John, we're going to get into in a second, which is what you were saying before, and that's mimetic. There's no point in just getting into something that is, going to be here for a short period of time. High APR, we all know that's not sustainable, and we've learned that, So it's very, very important that we find the real value in the network. And this is where network effects is sort of like the first place you can kind of go to find that. And we're going to go into a few examples now, which will help us identify that, albeit it's not hard. It's going to take a bit of practice, and there is a lot of breakdowns we can do into what I'm about to show you. So it can get quite complicated, and there is going to be a few links that I'll have to remember to put in the description, and it'll help you guys understand them in your own time. Okay. So there is 4 types of information age defensibilities that are still used in businesses today, online businesses. So when I say information age, it's the digital age. Ever since whenever the internet sort of started coming around, mid 60s, 70s, 90s, whenever that was. And there was a lot more, but they all got competed away for these. And we've been talking about one, which is network effects, because that is the most powerful. As I said to you before, 70% of the current information age businesses actually use network effects, and you're going to see why in a second. So I'll just get that up on the screen. Okay. So as we can see, there is 4. So the first is network effects, which is the center one, which we're going to break down. Then you have 3 more. So we've got brand, embedded, and scale. Okay. So I don't want to confuse anyone when we're going into this, because we are going to be mainly focusing on network effects, but I would find it kind of misconstruing if I didn't give you the whole picture. So let's just go through some of the other ones and explain to you why they aren't really that viable. So first we have brand. Now, I like to summarize that as companies focusing on a certain image, quite literally their brand. So these companies are more or less focusing on perfecting an image that makes people want to keep going back, possibly due to familiarity. Mm-hmm. So we see this in, companies like Apple, Nike, Crypto.com for a crypto example, Coinbase, and BlockFi. And they have to exhaust a lot of capital in order to achieve this effect, or this defensibility. And it isn't viable for a lot of projects because of that. Like, we're talking hundreds of millions, billions in order to get their brand, their image out there, and for people to go, oh, well, maybe I should start, using this as whatever platform that may be. So it's not really viable. Next, we have scale. So this is companies focusing predominantly on infrastructure, meaning that, again, they're spending billions or hundreds of millions on creating a highly efficient and cheap product. So we see this with Amazon. John can probably vouch for me here and say Google. Solana is a prime crypto example due to the block reward structure. So they're spending a lot of money on creating a really cheap or easy to use, whatever that may be, just focusing heavily on the infrastructure aspects. And again, it's not really accommodating for any of the smaller projects. Now we have embedding. Now this is one I find quite interesting, and this is a really, really successful defensibility. And it's companies focusing on reliability, more or less. So these are the sort of projects that embed their software into other enterprises, so that those enterprises become reliant on their service. And we can see this with Microsoft Azure, for example, which is like AWS or cloud computing. We also see this in a crypto example with Infura and Chainlink. Obviously, if you stripped away Infura and Chainlink out of a lot of the projects, I mean, hey, a lot of the network, a lot of the whole ecosystem will just drop. Okay, so it's great because these guys can obviously charge any sort of price they want because there is almost like a bottleneck through them. So the fourth one is, as I said to you before, network effects. And I'm not going to give you an example because we've already explained that to you before, but it is the most powerful by far. And that's obviously, as I said, 70% of all the information age businesses use it for that exact reason. It is the most powerful, it is the cheapest, and it definitely works. Okay. And as you can see on screen, it's more than just a black box, black circle. There is layers to it. And these are the different types of, I guess you could say, network effects in the network effects, I guess you could say, overall subheading. And they're on the side there. So I'm going to just get John to voice his opinion in a second, but if I just can go over them. So the direct, two-sided, data, tech, and social. And they each have, so a project can have multiple of these network effects active at one time. And I'm going to give you some examples in a second, but so the closer we are to the center of this particular circle, the stronger that network effect is. And I'm going to explain to you why in a second, but I just want to get your opinion on this, John.
Yeah, well, I think one of the things that you hear about Bitcoin when somebody's like, why proof of work? Like, why don't we do proof of stake? And really one of the arguments for Bitcoin is that there's literally a physical network of miners. And so it's connecting this ethereal world, this digital space, this metaverse. It's connecting it into the economics of the physical space through arbitraging electricity. That's basically what proof of work is. And so the most potent, potentially, this is the big debate in crypto, right? One of the most potent ways that you can build a network effect or a crypto network specifically that is going to stand the test of time is to marry the digital economy with the physical economy through this electricity arbitrage. And so that's that center level there where you're taking all the power of an economy that's taken thousands and thousands of years to develop, and then you're marrying that to a digital economy and creating an interlink so that the two are dependent upon one another.
Yeah, and that is what creates the strongest network effect possible, is when you merge the two worlds. And that, as John said, I mean, that's why physical is right smack bang in the middle, because if you have, like, physical nodes in a network, as in, like, people, for example, that is the strongest sort of network effect you can have.
Yeah.
And
so as we move out the bullseye, we get into situations that are looser in their network effect, but potentially faster. And so sometimes the trade-off is, well, it takes a lot of time, effort, and energy to build something on the physical level and then marry it to the digital world. So one of the values of proof of stake is speed of implementation. And so maybe you're starting further out on this network effect chart, but it allows you to have speed to market. It allows you to be more efficient. It allows you to potentially grow your network faster. And so one of the things that we have to think about, one, as we're building products as a community, but two, as we're investing, is, well, are the trade-offs worth it? Is taking the extra time to build something that has that gets married into the physical world, which takes more time, money, and effort, is the trade-off of waiting for that network to come to fruition worth not being a first market mover? And so these are the things that we always have to be weighing. And so if something isn't tied to the physical world, then we want to make sure that it has some of these other elements in place that reinforce the network effect and make up for the fact that it doesn't have any physical bonding.
Yeah, and you mentioned proof of stake. I think proof of stake is excellent because we're going to go into this in a bit, but one thing that you have to also look for as we go into the next part of this video is it going to be like mimetic? And a part of that is, like, we've got to think of a few different models that play into when we're researching specific things. One being a model called ESG, or environmental, social, and governance. And that is pretty much, part of that is making sure that something is sustainable in the future, So proof of stake is sustainable and it's environmentally friendly. So as John said, it's faster uptime. You can get it working faster. People having to go out there and actually purchase specific equipment or spend any sort of money on hardware that only has one purpose is going to take a lot longer to establish than someone who can just put up capital and supply that to the network to help it run. So there's two sides of the coin as well. So it's just overall a better option, but I'm sure people are going to debate me on that. All right, guys. So I thought I'd interrupt this program with a brief explanation into what these sort of defensibility options actually look like. And I think it's very, very important to visualize this sort of thing because lots of people don't really learn from their standard, just discussion. So let's get into what that actually looks like. Now, I want to quickly clarify, brain scale and embedding actually fall under the same category in terms of what the charting actually looks like. And it's very important I say that because, it's crucial that you go out and do your own research and you don't simply trust what John or I say in these. As a matter of fact, anyone says in any of their videos. But I want to let you know that NFX, the guys who will be referencing a lot of this in this video, who are kind of the leaders in the research about network effects, have done a lot of analysis and captured a lot of data in terms of not only for network effects, but also for brain scale and embedding. And let me not forget to mention that this is actually not a new thing. These sort of defensibility options have been occurring for decades now. And so we've got lots of data to show that this sort of, I guess you could say, chart looks the same for a lot of these different defensibility options. So let me just go into what those look like. So here at the bottom left of the chart, we have the genesis of a project. And this is obviously a project working in perpetuity, so it's never ending. Now, the brain scale and embedding kind of looks like a bit of a bow when we actually plot it. It looks kind of like this. So essentially what these sort of projects rely on is capital, time, and energy into sort of, getting their brand and their image out there. So what you'll find along this line is capital investments at strategic points. That obviously helps them grow very, very quickly. So let's just say we have a $1 million investment here, $5 million here. Let's just say they need to grow very quickly, $5 billion here, $1 billion there, and $5 billion here. So as you can tell, requires a lot, but it's also worked quite well because they've grown significantly. However, what we do tend to find towards the top here is the margins become exponentially smaller. So if I can just dot this out really quickly. As you can see, the difference is getting smaller and smaller and smaller. And what you do find is it does work kind of like this, where towards the top, you'll find that for such small percentages, fractions of a percent and change in terms of scalability, they'll actually need to invest a lot more capital. We can, throw some abstract numbers out here. And it doesn't have the same sort of effect as what the $1 million did at the very, very bottom. And it's very important we recognize this because network effects are almost the complete opposite of something what you would find with some of these businesses. So network effects, which I'm going to plot in a second, has a lot slower start, excuse me, and it looks something like this. So it'll start off very, very small. It will hit a certain tipping point. And then what will happen is it'll grow exponentially like such. And why is that? Well, it's got something to do with, obviously network effects themselves and what they actually stand for, which John and I are going to go over in just a second. But it's got to do with nodes. Now, a node is this green dot you can see here. A node is essentially a person. So this can be me, for example. So when we're referring to network effects, let me not forget to mention that let's not misconstrue a node with what we would find a node in a typical network like Bitcoin. A node is me, okay? Now, let's just say we're referring to our phones. So in the previous example in this video, we were mentioning telecommunications. Let's just say it's phones again. So this is me. I'm the only person in the world that owns a phone. It's pretty lonely and I can't really utilize it. There's no utility. Now, John comes along because John feels sorry for me and he says, Kyren, I'm going to buy a phone for you. Let's call. So I'm like, great, John, let's do that. So John and I talk back and forth and we've created somewhat of a utility. So we can only call between John and I. It's not that great. So what does John and I do to create a little bit of an ecosystem? So what we do is we call up some of our friends. I call up two of my friends. John calls up, let's just say John's really popular. John calls up a whole heap of his friends. And so we've got more nodes in the network. Now what happens is, obviously, John and I can communicate with these people. So let's just say friend A can communicate with friend B can communicate with friend C can communicate with me, and so on and so forth, which is fantastic. What's also interesting about network effects, and you'll find if you do a bit more research into this topic, is that this was previously not really known until somewhat recently, is of course, it's very easy to see in hindsight that we can obviously communicate geometrically. So we don't have to communicate between two certain points, or if we had a center point, that center point, you don't have to communicate via the center point to talk to anyone else. For example, let's just say friend E doesn't have to communicate with center point to communicate to John. He can communicate directly to John. And we'll find that it does create this geometric sort of pattern, which is fantastic, because obviously that means that there is more utility spread throughout the network a lot quicker, which does have an important play into why this does go exponential very, very quickly. But it's not the single factor. So what happens is, let's just say we've got about 10 or 11 people in this sort of network. Well, let's just say it continues growing, and due to multiple network effects, which again we're going to go into in just a second, 3 more people join. Well, of course, these 3 people can communicate to their respective parties and also can communicate interchangeably. So again, we're creating more of a network effect here and adding more utility. And it's interesting to note that, let's just say the 10th or whatever it is, the 1,000th, the 10,000th, the 100,000th person that enters the network has the same utility and same benefit as the first person did in the network as well. And we can also communicate. So, of course, that is a contributing factor to why this goes up. But yet another important factor is that we can actually create sub-network effects inside the larger network effect, which is extremely, extremely important. And you'll find this, like you've got Facebook, for example, you can create specific groups on Facebook. Reddit, for example, you've got your subreddits. So, of course, you've got the larger network effect at play. But now, because there are small network effects at play, it also taps into the larger ecosystem as well. And there's this huge flywheel that begins to create. But not only this, guys, but you'll find as a business owner that has taken a network effect into consideration and has optimized for that, is this actually happens without you needing to do hardly anything. Of course, there are going to be times like down the bottom, the initial stretch at the bottom here, where you will have to invest a lot of time, energy, so on and so forth. But there will be this tipping point where all of a sudden the network effect will begin to grow exponentially, and you'll begin to find many, many nodes join the network. And as I said to you multiple times already, we're going to go into what these different types of network effects are in a second. They begin to join for different reasons and strengthen the network and provide more and more utility. And that is a very, very important aspect with this whole sort of thing, is that network effects will grow without you needing to do much in the actual network once obviously it begins to grow. Now, of course, as a business owner, there is always more and more to do, but it becomes a lot easier and much more efficient than you requiring to invest millions or billions of dollars of capital along these certain points. And of course, as I said to you before, it does cap out. Now, of course, being anything, it can't just go straight vertically in a straight line, but you'll find it is still moving exponentially upwards no matter what. Of course, there's going to be different circumstances. Things might happen along the line that may begin to plateau that at the top, but more or less, it is a lot more efficient than brand, scale, and embedding. And I just thought I'd quickly point out as well, we don't really reference it too much in this video, but there is a definite difference between network effects and something called virality. So virality is just simply like a YouTube video. Let's just say Gangnam Style, for example. We all know it was extremely popular, and let's just say it started here with the creation of the video. Now, a virality often works in a kind of like a Merkle tree sort of design where it spreads. So then let's just say I watch the video, John watches the video. Now, we find it quite funny, so I pass that video on to 2 of my friends, and they find that quite funny. Same thing happens with John. And we begin to spread out like this, where it's almost, again, looking like a Merkle tree, and this is simply virality. Lots of people do misconstrued virality and network effects, or more or less any sort of defensibility option. You see, defensibility works as I kind of explained to you before with the nodes in the network, like such. Now, obviously, I'm not the best person to kind of give an example for this using the whiteboard, but you kind of get the message. You see, Virality has nothing more than just quick and easy, I guess, access to a video. Once, say, John or I finish watching the video, we're not going to stick around. There's no ecosystem to stick around in. There's no utility. There's nothing provided. So once we pass that on, we get rid of it. We are no longer a part of this sort of tree, I guess you could call it. Network effects, if in this example, if this is an ecosystem and John and I are communicating through our, let's just say our phone example, we are going to continue to want to stay in the network and continue providing utility as long as more and more people begin to join that network and provide utility themselves. Of course, if this keeps growing, we're going to want to keep using it. It's just as simple as that, guys. You know, a lot of the time, virality can be expressed with a lot of NFT projects. A lot of NFT projects that don't offer any utility tend to have a kind of here 1 minute, gone the next sort of philosophy where, you know, there's no real value that is provided within those. It's just a cool looking picture. You buy it, you sell it, and once the hype's kind of gone, once this all phases out, then the project tends to fall in price, okay? Whereas this, as I said to you before, the more people that join, price goes up. I hope you kind of understand with my attempt at an example, but of course, stay tuned. John and I go into a lot more detail in the coming video. So we've talked about it now. Let's go through the bullseye and just briefly explain to you what each of these are. And as I said to you before, I mean, there's 16 of them. We can go into a lot more detail. So I will link down below the article that goes into this. It's from NFX themselves. As you can see, these guys that actually created it, they're kind of like the people that are leading the network effects sort of category. And they go into each of these in a lot more detail. And it's very easy to read. So I highly suggest you do so. It will help when you are researching particular projects, identifying kind of where they sit in the bullseye. And, you know, the closer they are, potentially how more mimetic they are. So starting off with physical. So again, physical nodes in a network, and we can use examples like Comcast, AT&T, and if you're a fellow Australian, Telstra. And then we go to protocol. So that's like Bitcoin, that's Ethernet, fax. We go to personal. So that's Facebook Messenger, WhatsApp. And then we go to market network, and that's things like Facebook and Twitter. Then we go into what John and I have talked about a little bit is the two-sided or the multi-sided aspect of it, which is for the marketplace. So we have buyers and sellers, so eBay, Craigslist. A lot of cryptocurrency projects will fall into this, especially layer 2 and layer 1 protocols respectively. Then we have the platform as well. So this is operating systems where third-party developers create apps for end users. As I said to you before, layer 1 protocols, things like iOS, Microsoft. Then we have asymptotic marketplace, so platforms that don't really grow much over a long period of time and almost begin to plateau. And there's going to be some charts. I'm going to have to record a separate video and tack it on, people, but you'll see in that video there what I mean by that. So there's a certain plateau that all these sort of projects, these like Uber and Lyft, for example, will often find, and it's the same with the brand, embedded, and scale. They tend to have a sort of like a plateau at one point, and it becomes more and more expensive for them to actually have a growing network effect, rather than say any of these other ones. So, and it's going to sound a bit confusing now, I know, but just hang on, and I'll explain that in that little extra section of the video.
Yeah.
Then we have data. So data is when product's value increases with more data and when additional usage of that product yields data. Okay. Then we have tech performance on the very outside of the ring here. It's when technical performance of a product directly improves with increased number of users. And a perfect example is like Skype and BitTorrent, IPFS possibly as well. Then we have the very, very outer ring. You'll see that this is social. And this is composed of 3 different sections. So if we start at language, so this is when something becomes vernacular. For example, when we search something online now, no matter what we use, we tend to say, I'll Google that. And that's obviously, that was never a term before. Google is a company. but we often say, I'll Google that. So I'll look that up. We have belief. So belief is a network effect because we pass our beliefs onto those around us. And in this case, we can look at things like currencies, religion, and ideologies. I know for myself, John can probably vouch for this. A lot of our family and friends, whenever we get talking, we tend to bring up crypto, and that's kind of how belief comes into it. And the final one we have is bandwagon. And it's when social pressure to join a network causes people to feel like they don't want to be left out. And again, things like Apple is a perfect example. And you could also argue Google as well. So what do you have to add to that, John, if you...
Yeah, and I would just say one of the things that makes crypto one of the stickiest network effects that we've ever come across is that there is financial incentive, right? So when you're growing Facebook, it is a utility incentive. It's the same incentive as using the telephone. So you get to connect with friends, you get to connect with people globally, and that's a great incentive. And it's one of the reasons that Facebook was one of the fastest growing networks of all time. However, one of the things that makes crypto an even faster growing network effect is that there is a type of potential incentivization financially that comes along with growing the network. And this is why it's oftentimes referred to by people who don't, understand the full picture, and by people who do understand the full picture, as a Ponzi scheme, because one of the components of the network is this financial incentive program. And if that incentive program is not designed in a way that ties directly into revenue or utility, as we've seen, it can make the defensibility untenable. And because of that, it's what we're seeing in crypto right now with things like Celsius and all these platforms that are either over leveraged or not truly don't have incentive programs that are truly grounded into some kind of revenue reality. And so we just want to be thinking about, the reason that crypto gets labeled as a Ponzi scheme so often is because if the reward incentives don't have anything below the surface other than that financial reward, it is highly likely that network will fail. And so there has to be deeper utility. And we've said that in Jade, that there needs to be real effing utility, since day one. And what do we mean when we say real effing utility? We mean that whole bullseye. Ideally, a network has some kind of underpinning that connects into each rung of that bullseye.
Yeah, and I want to, also reiterate that the crypto really works because it does tackle a lot of those inner rings. It tackles, pretty much every single one of those rings, but mainly it does tackle the center ones. And it really is an entire ecosystem of possibilities. And when you think about it, there is a global network effect that we're looking at here as the entire cryptocurrency. And then we do come into sort of the sub networks, which is the different layer one blockchains. And then from there, it does get smaller and smaller and smaller. And then, we can go right down to almost, if you can argue, L3. So there is ever-growing network effects, and it is one big flywheel.
Yeah. And I think one of the interesting things that we can do as an investor is take the NFX chart that you just shared and basically print it out. And as we're researching, check the box next to each rung that a network checks off. A lot of times, if something is all hype, it's going to be just that outer ring. It's going to rely on social belief and marketing messaging. And I'll raise our hand and say that some of the experiment of Smarter Coin and Jade, started at that level. And then slowly over time, we're starting to build out deeper and deeper rungs in that chart to anchor in the real value of being a part of the network so that we can have a defensibility strategy and last through a longer term ecosystem.
Yes, for sure. You've got to look kind of like, you got to look at the long picture and then narrow yourself in. But look, John, it's great. I think people would really respect the fact that you guys are are observing this and are actually looking into all this sort of thing. I think it's a great insight for anyone, especially someone like myself. I can tell you right now, who does look at new projects every single day, hearing a team mention that, and we're going to go into why that's very important in a bit. But hearing a team know what they're kind of looking at in terms of like a network effect, for example, is vital into the long-term success of that particular project. So I want everyone to remember that.
Yeah, and I'll just say that with I mean, these are both community governed projects, but NFTreasure really is an experiment of what does it look like for the community to take it from day one and build out a concept. And so as builders, this network effect chart and all of the different rungs of that bullseye are even more important than when we're investing, because it determines the longevity and the life that particular project is going to be able to lead. And so as we're building out the NFTreasure marketplace and our creator toolkit, what we're building is tools that are going to be able to allow people to check a box next to each rung in that chart.
Yes. A great thing that you said before is print it out if you can. I mean, you can draw it. I wouldn't suggest that. And tick it off. Tick it off as you go. Great idea, John. Before we move on to the next topic, everyone, I thought I'd add in a little funny video here just to show you the powers of this working in action, of network effects actually working. This is more so towards the outer ring of that bullseye, but nevertheless, I think you'll all enjoy this. So let's just play that video for you.
Making a movement, then let's watch a movement happen start to finish in under 3 minutes and dissect some lessons. First, of course, a leader needs the guts to stand alone and look ridiculous. But what he's doing is so simple, it's almost instructional. This is key. You must be easy to follow. Now here comes the first follower with a crucial role. He publicly shows everyone else how to follow. Notice how the leader embraces him as an equal. So it's not about the leader anymore, it's about them, plural. Notice how he's calling to his friends to join in. So it takes guts to be a first follower. You stand out and you brave ridicule yourself. Being a first follower is an underappreciated form of leadership. The first follower transforms a lone nut into a leader. If the leader is the flint, the first follower is the spark that really makes the fire. Now here's the second follower. This is a turning point. It's proof the first has done well. Now it's not a lone nut and it's not two nuts. 3 is a crowd, and a crowd is news. A movement must be public. Make sure outsiders see more than just the leader. Everyone needs to see the followers, because new followers emulate followers, not the leader. Now here come 2 more people, then 3 more immediately. Now we've got momentum. This is the tipping point, and now we have a movement. As more people jump in, it's no longer risky. If they were on the fence before, there's no reason not to join in now.
So we can, that does go on for a few more minutes, and people do, it does get pretty big, but that's a great example of network effects.
Yeah. And I think, what it looks like in crypto is speaking your truth about like your crypto truth and into the crypto Twitterverse and really engaging in meaningful dialogue. And I don't mean just like this project sucks. like what's valuable for a network effect, whether you like a project or not, is to say, you know what, this project didn't get this part right, but if they had done it in this way, it would have been better. And then that project can either choose to take that feedback and implement it, or another community member can see that and help the project build that out, or an entrepreneurial member of the community can then go start a competitor product and implement that feedback in a way that creates a competitive advantage. And so having solutions tagged on to the back of your criticisms is one of the ways that the network effect, in crypto as a whole, continues to grow. And it's one of the ways that we can each contribute to a healthier overall ecosystem.
Yeah, if again, constructive criticism is the best sort of thing you can do for anything in life, in my opinion. Because, if there's no feedback, then obviously no one knows that they're doing something either wrong or not to the satisfaction of others. And that might be their intention. So it's obviously useful. And, this is a perfect example of what John was saying before. If you're going to contribute to an ecosystem or at least pay somewhat attention, spend that extra minute or 2 minutes out of your day and write somewhat of a detailed or a little paragraph explaining your concerns or feedback. And that will, I feel like a lot of people don't want to do that because they feel like their voice isn't heard. But I think John is a great example of someone who is literally there 24/7 in the community to provide that sort of support and listen to people. Like anyone on Twitter would understand that John is in his comment section 24/7, open to DMs. So am I. So I guess it's a vital component into growing an ecosystem, is like that video as well. As John said, apply to crypto, voice your concerns, call over your friends, and that's how it grows. So
yeah. And be willing to implement the solutions. I mean, the thing that I really want to be building out over the next 90 days are opening the GitHub repositories, which we've already done with NFTreasure, and I'm looking at best practices for doing it with Jade, and then implementing the proposal systems and the discussion forums, things like Discourse, that really allow us to build out a developer community in addition to an investor community. And that it's almost analogous to like bringing it into the physical world. Like the more that we have community involved in the actual development of the project, the stronger the project becomes, because it's just moving deeper into those rungs. Kyren, can you pull up the bullseye one more time? I just wanted to make another comment about it, because I really want people to print this out, and the next time that you look into a project, make sure that you're checking things off. Because if you look at all of the projects that have been called a rug, or who pulled their liquidity, or were pump and dump schemes, almost all of them relied on that belief and bandwagon outer rung and did not really tick any of the inner boxes. And so if you get into a project and the only reason that you're in the project is because of hype, which is part of the belief cycle, that usually means that at some point there's going to be massive churn on that project, which means people exiting the project, which means price dropping significantly and liquidity dropping significantly. That in many cases, that is not a true rug pull. The developers didn't pull the liquidity. The users pulled the liquidity because the only thing that existed in the project was that outer rung, the belief rung. And so as projects have roadmaps that dial and dig deeper into this bullseye, it actually means that churn rate corrects itself, and you're not going to have a mass exodus, which on the chart almost always looks like a rug pull.
Yeah, and the more of these rungs it has, the more you tick that off, as John said, print it out and tick it off. The more, I guess you could say, comfortable you can be with then looking into it further. I think this is a great place to initially start your research, along with what we're going to talk about in a second, which is being mimetic. And from there, then you can really figure out, if this project is worth your time and worth possibly your investment. But as look, as John said, the very outer ring is the least sort of sticky. And if you find yourself ticking any of those outer ones, the second last one, and the bandwagon language and belief, then look, we can't provide financial advice, but I would definitely be considering something else. But you will definitely be able to distinguish those sort of projects once you do start digging into cryptocurrency more from the ones that do start ticking a lot more. And you'll find that the best place to start is focusing on a layer one, and then working your way to the project you're interested in, because there's no point in looking at the project you're interested in if the layer one itself has properties that don't already align with what we've just spoken about. So start macro, in my opinion.
Yep.
So I guess we've already started to do it naturally, but I wanted to talk about how this can, excuse me, applied to cryptocurrency. So we're going to go back into the flywheel example we showed on our last video, but I think it is really just a perfect example of how cryptocurrency projects kind of utilize this. Okay, so this is the layer 1 flywheel, but it's the same for layer 2 as well. Layer 2, we're going to get to it in a second, but you could possibly take out one of these, I guess you could say, sections. But we'll get into that when the time comes.
Let me pause you real quick. I just want to make sure that everybody understands the difference between layer 1 and layer 2. Can you give us a brief rundown on that, Kyren?
Yeah, sure. So a layer 1 protocol, you'll hear about it all the time in crypto, is essentially the underwriting blockchain that other protocols can write smart contracts on. Now, what I mean by smart contracts are usually considered layer 2s. So you can almost picture it like the layer of a cake. Okay, so you have like the base layer, that's the layer 1. That's where everything is created. That's where you have things like, block rewards. For example, Bitcoin is a perfect example of a layer 1. Ethereum itself is a layer 1 protocol. And you'll notice that other protocols, especially on like Ethereum, Solana, they can have smart contracts created on them, and those smart contracts are the layer 2s, and you'll find layer 2s are smaller projects that utilize that layer 1, I guess you could say, as security support. And that's like, for example, AVAX is a layer 1, and Smarter, or let's just say NFTreasure, is a layer 2. It's built upon that blockchain to leverage and utilize the strengths that it provides. I'm not too sure if you can give a better example of that, John. Sometimes I throw around words that, it's already misconstrued.
I mean, in the context of this conversation, so in that center rung is the physical connection and the physical part of the network. And so all layer 1s, at least from my memory, have some kind of physical connection. They require some kind of a node network that is connecting us in the physical world to the digital world, where a layer 2 could be a wholly digital thing. It's relying on the node network or the network of the layer 1, which has some kind of physical connection to electricity or to human capital. It relies on that physical connection of the layer 1, but the layer 2 could be a totally digital program that lives on top of the layer 1, and so it's parasitical in that nature, where if the layer 1 dies, the layer 2 will also die. So maybe that's an interesting way to think about it. I'm not sure. You'll have to let us know in the comments if you have a better analogy for that.
Yeah, please let us know, because just like anything, you start to use jargon that already doesn't make any sense. So, but I think you get a great example there, John, and that's kind of reciprocated through this flywheel here, because it's a layer 1 flywheel, and as John said, you got miners and validators, which is that human capital or physical sort of capital hardware that a layer 1 has to provide. And a layer 1 is like your parents, for example. They support you with, as you're growing up, with a house, with food, things like that, parent or guardian. And then you're the layer 2. You're alive, you're working, you're doing things. You also can be providing, but you kind of rely on your parents to operate, to survive, and that's kind of might be a different way to look at things. Now, so the flywheel itself can be applied to either aspect, so layer 1 or layer 2. So the flywheel is a great example of somewhere where we can apply network effects into each of the different categories of what you can see on screen, the flywheel. And the first place you should really start, and the first place anything is born in life, is through the founders and the core team. So this is great because, as you can see on the flywheel, on the top left-hand side, they actually create the meme and the protocol itself. So what do we mean by meme? Well, it's the term that John and I have been talking about a bit here, and that's memetics. So is something going to stick? Now, we know memes typically as things you see on the internet, little funny, I guess you could say, words and GIFs, however you say that. And it's a lot more. There's a lot more to it. So essentially, a meme is something that will kind of survive and be constantly passed on from person to person, but not just pass on and be acquisition only. This person views it, passes it on, never looks at it again. A meme has to be something that person then keeps and holds, and whether that is through the network effect with utility, passes it on, but looks to sort of give back to that network. So that's the main thing we look at. The founders and the core team need to create is something that is going to stick and people are going to want to use and hold. Okay, and then obviously the protocol as well. So the protocol, it obviously they need to create something, and that is I guess you could say the framework. And I know, John, you have a lot to say about memetics. How do you think that people should go away and implement that?
Yeah, well, it is an idea easy to share, and so one of the things that we're still working out as a community with NFTreasure is what is the meme, because the community is the core team and founders now, and so part of what we've been doing as I've been sharing various promo scripts and slide decks on what NFTreasure is really figuring out what are the phrases that people gravitate towards when people talk about it. What are the words that come up? One of the things that we'll be doing at the NFTreasure marketing agency is creating what I call knowledge gap analysis for other projects. And it's basically going into Discord servers and using these seed phrases to find frustrations and then to figure out the language that those frustrations are being communicated in. Because what makes something memeable is that it's relatable and it allows someone to nod their head and say, yes, I have that problem. I'm so glad there's a solution. Now I want to evangelize that solution, or something is phrased in such an interesting way. I mean, it's one of the reasons that Smarter Coin took off so much, because it was phrased as the Squid Game of crypto. The Squid Game was a popular Netflix show at the time. It was already something that people were talking about. People already understood the high stakes world of Squid Game. And so bringing that to crypto created this kind of dopamine hit of a marketing message that could easily be packaged and shared. And you combine that with APRs that go up 1% a minute, and that's a sticky idea. Not a sustainable one, but it was memeable. And so we constantly want to be figuring out, okay, well, we can have a meme, does it also match the other areas of this flywheel? Because you can have a meme, as we saw in Smarter Coin, that is highly effective and sticky, but if it doesn't have the right utility to continue to move about this flywheel, it's ultimately, doomed for failure. And so with NFTreasure, we want to make sure that not only are we memeable by having the first play to own NFT marketplace, but we also want to make sure that we're driving that marketplace and we're driving that meme with what it actually means to have a sustainable crypto project. And that is really thinking about crypto from the standpoint of what makes a good business, rather than solely what are the reward incentives on the tokenomics.
Yeah, and it's to do that, it's going to take a bit of like rewiring the brain, because as John said, it's easy to see something like increasing APR by 1% a minute and go, wow, like that's incredible, which it is. Like that's what draws people in. But part of what we're teaching here at the moment is observing that, and then also looking at these other options on the flywheel and sort of creating your own sort of idea of where things are heading and how potentially memetic something is. Obviously, highly memetic, 1% APR a minute. But then also you need to, figure out, is that sustainable? And that kind of comes through, like token value and things like that.
Yeah. So with a lot of the Ohm forks, there was a really memetic idea around this idea of a community governed treasury. And where Jade pivoted from the initial meme, used the initial meme to gain traction, and then pivoted into real utility and giving the token actual value, is by saying, okay, now let's lock the treasury and actually go and invest that into interesting, potentially high ROI projects that on a longer time scale than the original meme will ultimately deliver value to token holders. And so that's the thesis of Jade, is what happens when you take a treasury that's primarily in stables, deploy those at market lows and into pre-seed projects, and then watch that play out over an 18 to 24 month or longer period. That we're in the early stages of proving out that thesis. And if that thesis is proven out, then Jade could potentially be one of the more successful bear market stories. And so we use the momentum of the initial meme to now drive a narrative around what's bringing real utility and value to the token.
I'm really excited for Jade as well because, as you said, like I have a very venture capital based mindset. I love the fact of a venture capital entity, and there's a lot of opportunity available for someone like Jade, for example, to find those early seed investments, especially now that we are in a bear market. I mean, there is so many opportunities, and personally I see this playing out one way. I don't want to say that because then people are going to misconstrue that, but nevertheless, guys, I think you know where I'm heading with that.
Yeah.
So let's kind of complete the flywheel. So next, apart, obviously we've now created a meme and a protocol. So how do we create token value? Well, to create any value in the network, you need capital, financial capital, and that's where investors come along. Okay, so this is where they supply, hundreds of thousands, millions of dollars in funding rounds, and by doing that, they create token value. So now the actual protocol itself is worth something. Okay, obviously depends how the team goes out and sort of implements that, but for the most part, that would create token value. Okay, then moving down through the flywheel, because there is now token value, and because let's just say the protocol has come into existence, miners and validators will be now incentivized to supply production capital, which is either hardware or software, or capital themselves to validate the chain. And that's what creates platform functionality or stability, security, however you may look at that. And this is the kind of the part where John and I were saying to you before, that kind of differentiates a layer 1 and a layer 2 protocol. But it's also important to know that typically a lot of layer 2 blockchains themselves don't necessarily have to have miners and validators, because they can rely on the layer 1, the base layer of that cake, to supply that sort of thing. But I would feel like I'm leaving it out, not saying that a lot of projects do have nodes in the network that can also do that, as we're going to be seeing with Ethereum version 2 coming out. The roll-ups, they can actually have their own sort of nodes. But nevertheless, amazing thing is that layer 2 projects don't actually need to have or supply as much capital or as much hardware as you would find on the layer 1. So the nodes can be few and far between, 2, 3, 4, 5 nodes, rather than tens or hundreds of thousands. So
Right.
yeah, so now we've created platform functionality, because now we have almost a working ecosystem. We have that base fully created and established. So now we move along, and this is where third-party developers come in. So third-party developers create human capital, and they themselves are a network effect, form of multi-sided network effect, or at least the useful application section is, because this is where third-party developers come on themselves, and they create sort of the layer 1 or layer 2 itself has created a middle ground, and the third-party developers are supplying to that middle ground, like you would find with Microsoft or Apple. And the output of that, the other side of that multi-sided network effect, is the end users. So they are the ones that obviously are using that. And so, so of course, third-party developers supply human capital. They're spending time in developing applications, smart contracts, and things like that go into creating useful applications. And then from there, of course, we've got utility, because there's now a need or a specific use case for the ecosystem, and that's where end users would come in, they themselves would provide a community, and therefore the flywheel will continue. But it's so crucial to understand that the founders and the core team still do have an impact in this whole entire flywheel, depending on how central or decentral it is, where that protocol is going, and whether they want to change that particular meme or any sort of idea about the protocol.
Yeah, and I would say in a layer 2 flywheel, if we look at the bottom of this where it says platform functionality, one of the things that needs to start being built out at this point in a layer 2 is the governance structure, because that is the human capital. It's the production capital, is the community. And so there needs to be mechanisms in place for the community to raise proposals and suggest direction of the protocol. And so that's one of the things that is on my 90-day KPI, is to bring those tools like Discord or Discourse and other tools for having true discussion around proposals and ideas as functionality, technical underpinning functionality that will empower the community more and more, not only in Jade Protocol, but in NFTreasure. And what that does is it creates a mechanism for kind of entrepreneurs to step in, and the third-party developers are the entrepreneurs. And when you look through, as I've been doing, some of the governance documents from things like Bored Ape Yacht Club, any third-party developer can go in and say, you know what, there's a problem here, and I and my team have the capacity to solve this problem. And so I'm going to put up a proposal that says I will solve this problem and I will build out this feature set for X amount of dollars. And then the community can decide if they want to bring that to quorum, and then on-chain vote. And if it passes with an on-chain vote, now this third-party developer potentially has the ability to get funding for building out a feature set that they would like to see in the project. And so that's why in a layer 1, but also in a layer 2, having the governance underpinnings, the technical way to raise a proposal, is a big part of that platform functionality that then allows for third-party developers to more effectively work with the protocol and develop more utility. And a big thing that I really want to empower in our community is to grow our developer community and create those kind of opportunities in both NFTreasure and Jade Protocol, because the more that we do that, the more that we strengthen this flywheel.
Yeah. And the flywheel doesn't necessarily have to be like a starting ground just for layer 1 and layer 2 protocols. Like as John was kind of saying with NFTs as well, you can apply a similar format to NFTs. Of course, there's going to be different circumstances. You're not really looking for miners or validators, but you are looking for some sort of platform functionality, like John said, governance as well. And, there is, again, some token value and things like that. Token obviously being the NFTs themselves. And so more or less, this is the framework of where you will begin to apply that bullseye that John and I were starting off with. If you can try and apply that to as many of these sort of sections as possible, and ticking that off on that bullseye and kind of taking a step back and looking at that and going, okay, well, does this have the potential to stick? And is it mimetic? And ultimately, you'll find your answer pretty quickly. And doesn't mean you have to invest in anything, but at least maybe take a step back and just see where that sort of goes.
Yeah, and I would say that admittedly, coming from the Smarter Coin and Jade community, one of my biggest qualms was that, those protocols weren't hitting on all these levels, because really they weren't in the stage that was ready for it. They were still in that mimetic stage, and they were also caught up in the dopamine frenzy of a bull market. And value orientation in a bull market is way different than a bear, and bears are for building. We hear that a lot. And I think that one of the things that I'm incredibly excited about for Jade as we move into the next bull cycle, whenever that is solidly building out each thing on this flywheel and each as many of the rungs on the NFX chart as possible, so that when we do move into the next bull run, not only will we be hitting on the mimetic level and the belief level and the hype level, but we will have all of the solid underpinnings to actually back that up. And those are the projects that I feel are most interesting to find in this current bear accumulation phase. What are the projects that are going to be able to hit on all those levels, or have a roadmap to build out all of those things, so that when there is an upturn in the marketplace, they're ready to put the pedal to the metal?
For sure. And maybe like a great exercise that you can also do is, going on and actually trying to apply this to projects, but also then giving yourselves kind of like criteria and sending this to Jade, as a part of the unicorn submission, and just seeing like kind of what their Jade's response is to your proposal. Like, you may use this as part of your, I guess, analysis, and say like, look, this is the research I've done. I've figured that, this is particularly mimetic or not mimetic, or, these guys hit a lot of the network effects that I think would be fantastic. And again, I think that's a great sort of exercise if you're not looking at personally, kind of like, give yourself 1 week per project. As John said, bears for building, build not just for projects, but ourselves. And I think this would be a great exercise, and if you can sort of learn that over this time period as well.
And one thing that Kyren and I will do, I'm going to commit us right now, is we will use this framework that we're saying to go through some projects and tick off the boxes and show you what it looks like when we do it. And maybe even build out a checklist based on this, because I do think this is a really interesting mechanism for analyzing a project. And it's a great way, a great framework as we build out the ability for those unicorn submissions to be voted up and down. It's a great way for us to be ranking some of those submissions. So see, great ideas come out of these videos. And even though I've always subjectively thought about projects through this lens, I think having a physical checklist that we can go through and maybe give a project a score based on how many of these things they hit could be really interesting. So
I think so.
All that to say, I'll stop sharing my screen here. We can close out with the rest of the thoughts that Kyren's prepared for us on network effects, and then in future videos we'll go into showing what it actually looks like to analyze projects through this lens.
Yeah. I think it's a really great idea that you mentioned, John. Ideally it would be great for live streams as well, because John and I are planning to do lots of live streams once we, begin to create something special here. And I think it would be great for everyone to tune into those as well. And just literally whatever you're thinking, there's no bad questions, no stupid questions, and just tell us what you're thinking on the spot. Because as John and I have just done now, we are learning as we're going as well, constantly, every single day. So there's never a silly question. We've all thought things before, and that would be a really, really great way we can connect with you guys, not just, pre-recorded videos.
Yeah.
So I guess network effects, to summarize everything, guys, just plain and simple, it's more or less a way you can visualize or see where a project is heading based on some of the aspects, or how close they are to the center and what particular network effects they've hit so far. Because there's no point in going deep dive into a project that isn't already, say, mimetic or, hits a lot of those center rungs. That's pretty much all I really have to say with it. I guess challenge yourself I'm going to leave that document in the description below that will outline all of those rungs for you in a lot more detail. And, if you can learn 1 or 2 of those a day, you're doing a great job. So that's all I really have to say. And
Yeah. I think if you've made it this far, thank you. I'm trying to practice brevity, but I'm not good at it. Hopefully you found something meaningful or interesting in this video. And if you did, feel free to share it in the comments below. That certainly helps the algorithm kind of push this out to more people. And a big part of why Kyren and I are starting to build out this video network of kind of core crypto terms is that we want to create our own network effect around this video series to bring new eyeballs into the Jade protocol and NFTreasure ecosystem. So it's always slow going when you're first starting to build that audience on any content network. But several times for clients and for myself in the past, I've been able to build to significant levels. And there is a snowball effect that happens as a content creator, which is a part of a network, its own network effect. So I appreciate you tuning in. I appreciate you sharing this if you found it meaningful. I appreciate you calling out the part of the video that was most meaningful so that we can fine tune towards those things as we create additional content. And one of the action items that I will definitely take away from this video is, one, doing some live streams where we're actually going through this process, and two, making sure that we have a checklist that you can print out that is specific to our ecosystem and how we as a community want to be ranking projects. And I think this is something that we can use for unicorn submissions, but also for NFT projects as we onboard NFT projects. And with our new creator tool set in NFTreasure, as we're creating NFT projects, making sure that the concepts of those NFT projects are checking off as many of those boxes in that bullseye rung as possible. So I'm John Ray with Jade Protocol and NFTreasure, joined with Kyren Cater. You can see our Twitter listed below, and we'll see you in the next one. Bye.
Bye, guys.